Hello everybody, this is Jeff Wolstoncroft, Senior Manager at H2R CPA. Hope you all are enjoying summer and sweating from the record heat we have, and not your PPP forgiveness. Myself and many of us at H2R CPA have been keeping up with the rapid changing landscape of the Payroll Protection Program. A little background on myself. I help manufacturing and distribution, auto dealers, and not-for-profits understand and improve their operations and cash flows. Today, we will be reviewing some of the key dates and timelines of the PPP as it has to do with full-time equivalents.
To start, let's first discuss important dates and figures. In the PPP program, they outlined a covered period. This is 24 weeks from the date of the loan, or for 8 weeks beginning the date of the loan, for loans made prior to June 5th, 2020. In the guidance, they've outlined an alternative covered period, which can be 8 weeks or 24 weeks, depending on the start of the loans. This option is only for biweekly or more frequent payers. PPP also outlines reference periods for comparison to your covered period. These are your options, and you can choose from February 15th, 2019 to June 30th, 2019, January 1st, 2020 to February 29th, 2020. And for seasonal employers only, you may choose any 12 consecutive weeks beginning May 1st, 2019 and ending September 15th, 2019. These covered periods and reference periods are important when we're calculating the full-time equivalent potential reductions in your forgiveness for the PPP program. February 15th, 2020 is an important date because this is the date in which leases, loans, and utilities must have been in place to qualify for expenses under PPP forgiveness. Additionally, this will be the date used to compare headcount for use of the EZ form. February 15th, 2020 to April 26th, 2020 is important when calculating potential FTE headcount reductions for use in the safe harbor calculations. The safe harbor restoration date is either the date of your application or December 31st, 2020. The safe harbor restoration date is only required for consideration if your average FTE headcount in your covered period is less than your chosen reference period. Forgiveness applications are due 10 months after the end of the covered period. Max wages paid to owners is $20,833 in the 24-week period and $15,385 in the 8-week covered period. This includes benefits paid to owners. The maximum wages paid to employees is $46,154 in the 24-week covered period and $15,385 in the 8-week covered period. The maximum wages are important because that is the maximum available for the forgiveness calculation for the employee or owners. At least 60% of the forgivable amount must be spent on payroll costs. Now let's talk about calculating FTE comparisons and how to avoid reductions in forgiveness. The forgiveness application will first have you consider two safe harbors. Number one, if you were not able to operate your business at the same levels starting February 15th and through the end of your covered period due to restrictions imposed or guidance issued between March 1st, 2020 and the end of 2020, you may qualify for the safe harbor. Number two, if your average FTE count for the period February 15th, 2020 to April 26th, 2020 was less than the count on the payroll inclusive of February 15th, 2020, you will have until the date of your application or December 31st, 2020 to restore your headcount to the February 15th levels. If you do not qualify for a safe harbor, then we will need to calculate our average FTEs for the covered period and your reference period. We recommend considering calculations for all available covered periods and reference periods. This will allow you to choose the most advantageous calculation. When calculating FTEs, some items to consider are as follows. Reductions that do not count against you are losses of employees outside of your control, such as voluntary quits, retirement, and death of an employee. Additionally, if you have offered to restore cut hours for jobs and the offers are refused, these will not account against you. If you were not able to restore your workforce or were forced to lay off employees to meet safety guidelines, these losses in FTEs will not count against you. All employees who work 40 hours or more will be counted as one FTE, and employees working less than 40 hours per week will be considered a partial FTE based on 40 hours per week. Finally, you have the option to calculate FTEs based on a scale where an employee working an average of under 40 hours per week has a half FTE, and all employees working 40 hours or more as a full FTE, but you must apply this method consistently.
We hope you have found this helpful. If you are a business owner or run a not-for-profit, we would love to talk to you and see how the H2R team can help improve your organization. Thanks for listening, and stay safe.